Hi, I'm Urmi Desai, and this is the Move Smartly Show. This week, we're back with our popular consumer question and answer segment, The Situation, where my co-host, John Pasalis, president and broker of Realosophy Realty in Toronto, takes your questions about the GTA, the Greater Toronto area, and all of your real estate, situations that you are contemplating or trying to get yourself into or perhaps out of. Hi, John, how are you?
Very good, very good. You're looking very tanned.
I'm very tanned and I'm slightly still on vacay time and mood. So hopefully I can make sense. To help us along, we've received some really good questions from our viewers and listeners. Again, a reminder that you can send your own questions into askjohn@movesmartly.com and have John respond to the situations that you're experiencing. All right. So
Sure.
with that, let's get started. Question one. Hi, John. I recently watched your video called Toronto Condo Investors Are Bleeding Cash, and I have a situation that relates to it. My parents bought an investment condo at the height of the market in Cobourg, Ontario in March 2022. They bought a bachelor with no bedroom for $485,000. This was at 185,000 over asking. It had been recently renovated in the last 10 years. This condo unit is in a really nice building and footsteps to the Cobourg beachfront and has mostly retired middle upper income people living in the units. It is also the only high rise in the area, which makes it rare. My parents paid cash, so there's no mortgage and condo fees are very low at $300 a month. They currently rent it out for $1,700 a month. At the time, I advised my mom not to pay more than $350,000 because during this time, comparable one-bedroom units were selling for $550,000 to $700,000. Now, a one-bedroom unit, like my parents, is selling for closer to $500,000. My parents feel that if they were to sell their bachelor today, they wouldn't get more than $400,000. Where do you expect condo prices to go in an area like this over the next 1 to 2 years? My anticipation is that interest rates should go down later this year, which might help accelerate home prices back up. The debate is whether to sell this year, probably at a loss, and then reinvest the money back into another area of the market with significant market gains. Or is it worth waiting for 1 to 2 years to sell closer to 485,000 and just break even and reinvest then? Let me know your thoughts. Thanks, Mark. A lot. And John, this is a bit different from the should I sell my condo question,
Yeah,
because while Mark was inspired your video about investors bleeding cash, correct me if I'm wrong, but these investors are not bleeding cash. They're just not appreciating the way they want to.
exactly, because they bought in cash. So they actually are making money off the property. Um, they're just obviously saw a bit of a loss and they're wondering if they should be putting their money elsewhere to see a bit more of a gain. So it's a tough question. I mean, I'll start by saying I know very little about the Cobourg market. Although $500,000 for a studio seems on the high end. But again, I don't know the market that well. But I think there's a lot of things to think about. So the question here is, do they sell today and lose what is probably realistically 100 grand easily? If you factor in sort of all the costs plus the decline in the value. So rather than being left with 485, which is kind of where they started, they'd be left with high threes and then take that money and reinvest it, or do they just keep the property and wait? And there are a lot of kind of different ways to approach this, right? So if we think about the former strategy, which is sell it and reinvest, you don't want to, I mean, one rationale for doing that, okay? The one reason why people sort of rationalize doing that is if they don't think the condo price is going to go up very much and they think they can get a better return elsewhere, right? That's tricky to do. I mean, you can't just sell it and just buy another home and expect to do better. Like if you're going to be an active real estate investor, find value, use your capital, do something that's going to give you a better return, maybe. But just buying, another property, another condo or something somewhere else, I don't know if that's necessarily the best strategy because you're just substituting one for the other and you're trying to just what might be a slight difference in the appreciation of the condo versus the appreciation in a house or something else. And can you get a house in Coburg for, high 300s? So I think that's sort of the challenge with that. You can't just you have to have a plan. Like you have to have some strategy where you could reuse that capital and maybe get a better return than what you're getting on your condo, which is whatever, 4 or 5% right now, effectively on your cash flow. The other side of this is that, I think Canadian real estate investors, I don't know, have become spoiled in some ways, right? Like we're very used to seeing everything go up 10% per year or 6% per year. And when we don't, we think, well, we just need to pull the plug, sell, and move on. And I say we're spoiled because obviously real estate doesn't go up, and I'm saying this from like a family who kind of grew up in real estate investing. I mean, my dad kind of did what, as a Greek immigrant, did what you're not supposed to do, which is put all his eggs in one basket and basically had all his money in real estate in the 90s. And when the market tanked, his he didn't just turn around and say, okay, well, now I'm going to sell everything because I've lost the money and try to reinvest somewhere else. He just sat it out and waited for the market to recover because he had these assets. He's holding them for the long term. He didn't care about short-term dynamics. And of course, obviously, you don't really want to sell for a loss. I mean, is the other rationale. Like, why the heck would they sell when prices were depressed and sluggish? So at the end of the day, unless you have a very good strategy on how you're going to reuse that capital, I mean, why sell? I mean, at the end of the day, they're still making income. Whatever they're making, their net return is probably like 4 or 5%. And that obviously doesn't account for any future appreciation. So you still have an asset that's paying you rent. You have this cash flow. Um, you know, so again, I think it's a very personal, obviously, decision. You have to have a plan. I don't know if you necessarily need to sell, but again, part of it is how you want to use that money and use that capital. So, I mean, again, it's not maybe a precise answer because obviously this is very personal. And it's hard to answer personally because I, again, I don't really invest in condos. You know what I mean? So I can't even speak from it from a personal perspective, what I do, because I probably wouldn't have bought that. You know what I mean? I'm kind of would invest in something else. So it's very hard to kind of answer personally, but there are different options, I guess, depending on your strategies.
So there's a couple things I want to unpack here.
Sure.
You might not buy this product, but if you were advising a client, obviously the situation going in that Mark unpacks,
Hmm.
buying at such a premium
Hmm.
is probably not what you would advise. Now, I get the sense that the marketing of this being a very rare building was maybe something seized upon. But on the flip side, does that mean there's actually not a lot of market for this product in Coburg? And conversely, it could have been that one project was really hyped.
Yeah, I mean, it's hard to say. Listen, I think it's challenging because at the time, and I'm not going to blame the buyer's realtor in this, but certainly during the peak of the market, there were a lot of agents that really adding fuel to the fire, like, making people feel like it doesn't matter what they pay because prices are only going to be higher tomorrow. There's this lack of supply. Prices will go up forever because we're not building enough homes. So the price you're paying today is almost irrelevant. I've heard some agents say, what you pay is the new market value. You know what I mean? So you can't really overpay because you're now setting the market, which again, these are like irrational statements that I would hear agents make in the peak, in the bubble, during the insanity. And that was kind of sort of peak market right around then. That was just before the bank started. That was sort of the peak frenzy before rates really started accelerating.
So
Yeah, go ahead.
I mean, I think it's fair to say that the market boosters have kind of changed the slogan. It's not always that real estate goes up. It's in Toronto area become real estate always goes up everywhere.
Hmm.
And this idea that every project, every segment in what we would call the wider GTA, of course, Coburg is a bit further out. I believe that's Eastern Ontario. Uh, but it's still on the edge of what we would consider the GTA. It's
Yeah.
not that far outside of it, right? It's
No.
it's pushing the bounds. Correct me if I'm wrong, towards
Yeah.
Pickering. Is that
Yeah.
right?
It's because of
So
age. Yeah. Yeah.
yeah, so the mantra kind of just became, well, if it's always going to go up everywhere into the Toronto area, it seems to me that during the COVID pandemic and especially, that kind of run up, the bounds were really stretched, and that slogan even went even further. And now you may have a very specialist project in a
Mhm.
certain area.
Yeah.
Um, which is one thing that I'm observing. The second thing is, you mentioned that your father said, real estate doesn't, I think you said real estate doesn't go up, but I think what you mean is your father said real estate doesn't always go up.
Yeah.
And that
Exactly.
his goal was to hold for the long term and never have to sell if he didn't have to. Now, the
Yeah.
one thing about Mark's parents is they bought in a comfortable situation. They're
Hmm.
actually following some of the rules
Hmm.
very well, in the
Yeah.
sense that they are not now
Not the
pushed
stress.
into
Yep.
having to sell, which is a different situation from the video that Mark mentioned,
Hmm.
where a lot of people were bleeding cash month
Exactly.
by month. So
Yeah.
in a case like that, it seems like they're not really selling because they're losing, but it's more that they are FOMO. They're worried that they're missing out on better appreciation elsewhere,
Yeah.
that
But
they've
again,
somehow bought into the wrong part of the market or the wrong product, a condo versus home.
yeah, and I think that's a reasonable to concern, but you have to have a plan and strategy. If your goal is you want a slightly better return, how the heck are you going to do that? It's hard to predict where the better returns will be. Obviously we can make some educated guesses, but you have to have a bit of a strategy or a plan if you're going to go down that road. You know what I mean? And sometimes getting a better return is having some leverage, some debt. We're not talking about like overextending, but your return on your capital investment tends to be better. But if you have debt and taking on a little bit of a mortgage, well, then your cash flow is lower, right? So this all kind of feeds into, well, what's their goal? I mean, if they're retired and they like having some steady rental income, then you don't want to spend too much more, take on mortgages, and because it's going to impact your monthly cash flow, right? So again, I think there's so many factors that you need to consider if you're in that situation, and obviously your personal goals, and just you have to think about it as a long-term investment. I generally don't recommend selling just because prices dipped. Like generally, I wouldn't do that. You know what I mean? Personally, like if I had real estate that declined in value 25%, I would 100% generally not sell because my plan is for 20 years. It's not for 2 years, right?
So that kind of leads me to my final observation, which is so many Canadians are investing in real estate that
Mhm.
it seems to me that it's starting to make us think about, or maybe overlap in some of our thinking about, RRSPs and long-term investments in stock and like other areas of the market, the
Mhm.
financial markets.
Yeah.
There you often hear the same advice: buy for the long term.
Mhm.
I get a call from my broker if there's a lot of activity,
Mhm.
and the market's really down, especially even my parents, as they got closer to their retirements, they would get calls from their brokers
Mhm.
reassuring them that
Mhm.
this is a 1 or 2 year dip, but they're cashing out longer, so stay in it.
Mhm.
There seems to be this feeling like, if you can just move out of investing your stocks in one sector
Mhm.
in one part of the market and just
Mhm.
move that into another, well, why
Exactly.
can't you just take your property money and move it from one product or one area of Toronto into another?
It-
I'm wondering if we risk missing some
it's
key differences in thinking like that.
100% because the transaction costs are high and it requires a lot of knowledge and expertise if you're trying to navigate the market that way, right? Like if you want to say, you know what, we don't want to just buy property. I want to become a builder and I want to buy a 2 unit property and convert it into a four. If you want to do something like that, it's completely different. Like you're using your capital in a different way. Obviously, there are risks to that, but you're trying to get a better return by effectively starting a real estate business rather than just sitting on a rental property. It's completely different. I mean, if that's what's, these people want to do, but they're retired, it doesn't really probably make sense to do that. You know what I mean? So,
Yes, that's such a great point. I actually relate to Mark and his parents. I mean, it seems like it's more, a lot of us think passively. If we had just invested in the right unit, we would have done a lot better off in the right project, in the right part of Toronto, right?
But a lot.
and we wouldn't have to do much more than that. Just get that better unit, that better project, and there's risk to thinking like that.
Well, 100%. I mean, and I did the video, whatever, last week, 2 weeks ago, about the pre-construction market. I mean, a lot of people are feeling pain because it was this exact same as this scenario where they paid a lot for these units, expecting prices to go up forever. And they're not, and their cash flow's terrible. You know what I mean? So yeah, I mean, I think we have to, I mean, it's going to be interesting how the market's going to evolve. Maybe it's going to take some of this assumption that real estate is easy money out of our kind of collective thinking in Canada, because that is kind of what people have been thinking for years. You just buy anything and it always goes up. Like, it really doesn't matter. And I think, you know, why, I think it's important to have a little bit of a cleansing in the market, to feel a little bit of pain when the market slows down. And maybe that will adjust people's understanding of investing in real estate, because it doesn't always go up.
Yeah, and to be fair to Mark and his parents, I've heard the same kind of speeches from industry professionals. Not only is they're feeling that the GTA, the Greater Toronto Area, is never going to have enough homes. There's always this, and let's use the word marketing, behind why your particular project or area will be protected against the risk of any downturns.
Oh yeah.
And so we hear a lot of different variations on that.
Mhm.
And so, we do hear Mark kind of pointing out some of it's the only high rise. It's a really good type of clientele living in it, right?
Mhm.
I think sometimes when we're still buying, we need to think really strongly about that.
Mhm.
That a lot of projects, I don't know what you think, do they try to differentiate themselves in that way to
Yeah.
try and make it seem like you're inoculated against the
Mhm.
downtimes?
Yeah.
When my sense is from what you're saying that real estate tends to move up and down together over a wide area.
Mhm.
But as you say, because it's hyper local and products are different, there are some key differences, particularly in the short term,
Mhm. Yeah.
right? So it's not true that if you run up really fast, your specialness will protect you. Sometimes things that run up the fastest go down the fastest,
Yeah.
right? So,
And I
um,
I think the challenge with this situation, I had a meeting with another person in a similar situation who bought at the peak. The challenge is that this decline is not even all a market's decline, right? Like, and the person I spoke with as well is in a similar situation, this where they significantly overpaid at the market peak, right? And those are two different things, because if the market value of your condo falls 50, 70 grand, that's one thing. But if you overpaid by 50 to 70 at the market peak, well, your decline's like 120. You know what I mean? So, and I think that is the challenge. It's that a lot of people did overpay at the peak and got caught up in this frenzy, in this kind of, I mean, and that's kind of what, these bubble periods are like. They're very behavioral. It's kind of emotions get in, and even though the son in this email is like, don't spend more than 385, that or whatever it was, the parents went and spent 485. You know what I mean? But again, because in these periods, like, there's this emotional components to real estate, and I think it's important to be mindful of that. And I think in the future, for us to try to separate the emotions, and obviously, similarly today, separating this feeling that you've lost money, you know what I mean, and trying to rationalize what the best decision is by taking that off of the table, this idea that I have to always keep making X% per year, and just think about what the best way to use the money is, and make your decision that way.
Yeah, so it's certainly been an issue. Mark, I think it's very sweet that you are helping your parents. Kudos to you. Try and make good decisions, and hopefully that helps all of you, and that things work out for the best. So thank you.